Morning. It is April 16th. We are 30 minutes before the stock market is going to open. We have had a very active week of earnings. So I'll be going over some earnings reports today and going over, I think, the biggest headlines of today. There are substantial bits of information that I'll go over, some news releases that have come out that are moving the market. It looks like we're going to open in the red this morning. The NASDAQ is down 1.68 and the S&P is down 0.95. The Dow is holding it together a little better. Crude oil is up. Gold is up. Gold has been doing well for the past year. The Asian markets, we've got the Shanghai ended a little higher. The Japanese stock market ended lower and so forth. Europe is waking up to a little red, or actually they're well ahead of us. So I should say they're probably having lunch now and they're in the red. I'm going to cover ASML later on this morning. That's a Dutch company. And that's one of the main earnings that I'm going to go over in a little bit. And that's in Europe. So we are going to open in the red so far this year. No news to anybody. It's been a year where we've seen this correction that I think we needed it. We needed a nice correction to, really make irrational investing out of style. Just seeing stocks fly up just because they're popular is not good for the market. It's actually a really bad thing for everyone including the investors in those stocks. Temporarily, they do great. If they sell at the right time, they have great returns, but rarely do they all sell at the right time. And those stocks end up really crashing. And we've seen a lot of examples like that. So it's good to have a market that is going to reduce stock prices, have drawdowns, and make stocks more reasonably priced. And in some cases, I think we're seeing some really good discounts. That's what I'm trying to do, is get into the stocks that are best discounted. I'm kind of taking it, I'm slowing down the volume of investing that I'm doing right now, just because I'm not quite sure if the market's going to trade sideways, if it's going to go down further, or if it's going to go up. We had such a hard 2 months that it leaves me a little shell shock, thinking, well, we could still go down another 10%. So I'm not going to be in a hurry to deploy all my capital. I've actually been selling a few stocks and some crypto to expand my cash pile, to make my cash pile bigger. If you're interested in finding out what I buy and sell each week, become a member. And I send out a member-only video covering my buys and my sells each week. You can get more details on the homepage of the YouTube channel. It's easy to join. So that's the market as a whole. Looking at the heat map for yesterday, and it's interesting that just a few hours of time really are going to move this heat map. NVIDIA came out with news that they have to write off $5.5 billion for chips that I think they had manufactured and inventoried that were going to go to China, but the US government's not going to allow that. So they have to write that inventory off. And that's going to affect, obviously, NVIDIA, and Broadcom is down. And ASML had earnings this morning, and that stock was down 4% last time I looked at it. So the whole semiconductor space is going to have a tough day, I imagine. The sectors, materials still leads the year. Good old boring companies and materials. They mine materials out of the earth. They get a commodity and they put it to market. They might even add some value to that commodity and then put it to market. But those companies are not a bad place to go. They typically pay dividends and they appreciate at the right times. They're cyclical. So you got to buy and sell at the right times. And buying materials right now is not a bad idea. I've been doing so. There's 3 stocks that I'm buying into for materials. Consumer staples, when times are tough, investors go buy consumer staples. Utilities, same story. Investors flock to utilities when times are tough. Healthcare is just barely in the green. And then down the list, technology is where most of the corrections are happening because it was expensive, and it flourished for a couple of years. It somewhat ran wild, and some of these stock prices just got really expensive. So that's where technology's at. Consumer discretionary is down. There's a big story yesterday that Louis Vuitton, the company that owns Louis Vuitton, as well as other premium brands, they're not doing so well. Not a big surprise. I mean, the economy is not, doing great. Consumer discretionary is doing better when the U.S. was sending out stimulus checks to people, and then they can go out and spend it freely because they didn't earn it. And now there's no stimulus checks. It's just everybody has to go make a living and then decide if they want to spend money on a new pair of Nikes or a new handbag or whatever discretionary item they had previously had enjoyed buying. They're really watching their spend. I think we're seeing an economy just switch from everything's normal. We are in a consumption-based economy where people like to go out and shop and buy things that they need, as well as things that they like to have, not necessarily necessities. And in that period of time, consumer discretionary, or the switch to consumers now being careful with their spend, is really affecting consumer discretionary. I don't think that's going to change soon until we get out of, I think, the whole tariff struggle. And we either have this recession that's coming or for sure don't have the recession. I think we're going to have a recession. I think there's a lot of things that are pushing us towards a recession. And if we could just have a light recession, that'd be great. Get it behind us, and then we'll move on. So that's what's happening with sectors, and plenty of earnings to talk about. We've got ASML was the biggest cap that announced. They're in Europe, so that earnings report was available nice and early, so I was able to read through that. I already released a video on my channel. You may have already watched it. Abbott, which is in the healthcare space, Progressive, an insurance company, they announced. Prologis, which is a company that does logistics. I did want to look at this one. Let me get that ready, because logistics companies tell us about the economy, because the more business they have, that represents how much commerce is happening. Businesses are shipping things to one another. They're shipping things to customers. The more shipping volumes that are occurring, it's a barometer for the economy. That means the economy is doing well. If Prologis is doing well, that probably means the economy is doing well. If they're not doing well, that means the economy is slowing down. So let's take a look at that. U.S. Bank announced, and that's a smaller bank. We had the big banks announce on Friday and a couple of others yesterday. Covered those yesterday in videos. Kinder Morgan in the oil complex, another insurance company in the travelers, another logistics company, but this will be after the close, CSX, which is rail. So we have plenty of earnings announced today, and we have some more tomorrow, but we got plenty to work on today. So let's get into that. So I'm going to get into the segment of reviewing stocks. If you would like a stock reviewed, there's 2 paths. The first path is, if you're a member, just put it in the chat. I'd be happy to go over a stock that you put in there. And that's one of the perks of being a paid member of the channel. If you're not a member, don't want to be a member, that's fine. It's $5 per review, per stock ticker. If you want a volume discount, if you pay $10, you get 3 reviews. So take your pick. If you'd like a stock reviewed, please put it in the chat. buy a super chat. If you are not a member, if you're a member, then it's free or no additional fee. It's good to see we're 15 strong on the live stream. Thanks for joining. Rotel and Cheese, very good to see you. Hope you're doing well. All right, let's crack open some earnings. Paco, how are you? You want to take a look at Zscaler? Glad to do that. So I will put that on the list. Okay, let me go over ASML and then we're going to go over Zscaler and just keep the requests coming. All right, so ASML is they're part of the semiconductor space and they make these giant machines. They're like the size of a bus, like a school bus. I'm not exaggerating. And these machines will make semiconductors. So when TSM or another foundry buys these machines, they're paying, tens of millions, even maybe 100 million to set one of these things up. And then they operate it and they produce semiconductors. It's a big investment for another business to buy a product from ASML. They are a big cap stock with a $269 billion market cap. And overall, you're paying about 9 times revenue. Now, this business is fairly priced. What's interesting about semiconductor, What's interesting about semiconductor is that it's a cyclical business. You have really good years followed by years that aren't that great. You have some quarters where you actually have contractions where the market says, hey, we've had enough of your machines. We're not going to buy them for a little while. Then they come back and start buying again. And I think customers are coming back to buy again. Now, what's holding back this stock today is that the economy isn't clearly in an expansion. There's two things: tariffs making the uncertainty of a recession happen. That's part of the recipe there, that they can't really expect to expand, and that's what's holding back the stock. The stock has been struggling for a year, and I think that's one of the symptoms of semiconductor got red hot a couple years ago, and it's really cooled off and it stayed cool and really has underperformed the other sectors. And I don't know that it's going to change anytime soon. I don't think we have a big boom period coming for semiconductor. So if you'd like more on ASML, I've got a nice video released on my channel, in the last hour. Take a look at that. All right, so let's take a look at Zscaler. Zscaler is a software company, and they focus on the cybersecurity space. And Zscaler, for a lot of reasons, is discounted better than the other companies that are out there, like CrowdStrike and Palo Alto and others. There's a number of companies that do cybersecurity. It's kind of it's an industry that hasn't had a dominant player for like the last 30 years. No, it seems like cybersecurity, there's somebody who's really good at it for 5 years, and then somebody else takes over. Somebody else does it better. And this is an industry where the small players get leapfrogged by each other, or they get acquired by a bigger business. Zscaler has really nice growth. That looks really good. So it offers, this company, when you look at their stock, it isn't overly expensive, and I could show it a different way. I like showing things on Google because it has nice charting, real clean charting. And when I look at Zscaler over the 1 year, it's up 17%. But let me compare it to CrowdStrike. CrowdStrike's really expensive. I think CrowdStrike's a good company, but they're just, what are you buying, right? Like you're buying a similar business, but it's more expensive in my opinion. I'll show you the valuations of both. So over the 1 year, CrowdStrike's up 31%, Zscaler's up 17%. Over the 5 year, CrowdStrike's up 500%, where Zscaler is up 200%. They're both winners, but you can see where Zscaler kind of flattened out. And I think that it sold off for a little while, and it was good stock to pick up for a while. And it looks like it's still maybe discounted. I'll show you my intrinsic value and how I look at that business and value it. But that's where the opportunity is, right? Is I've covered super investors, and maybe you've seen some of the videos I put on my channel. Several super investors are really focused on the discount that they get on a quality business. And some super investors are really after great quality businesses. And I get that. Like Warren Buffett has famously said he'd rather pay a fair price for a great business versus getting a great discount on a fair company. And he doesn't follow his own expression, by the way. He's bought a lot of businesses that were in trouble. Like he bought into Heinz a number of years ago, and they were in a lot of trouble, and he bought into that business. He's bought into some businesses that were in trouble, and he helped them, and it was a success for everyone. So he himself can't pass up a good deal. But he also buys high quality, like Apple. When he bought it, it was high quality. So Zscaler is an example of getting a better price on a company within the cybersecurity space. And I thought it was an opportunity, and it continues to be an opportunity. When we look at the valuation that I have for Zscaler, I'm taking their cash flow, and they have good cash flow, growing it by 25% in the next 4 years. Their revenue is growing faster than that, and this is a high gross margin business with very good cash flow generation. And when I forecast their cash flows, I get to about $38 billion of intrinsic value of all those cash flows. I add cash, take away debt. The balance sheet is very strong, showing that they have more cash than they have long-term debt. It's a very good sign. I don't like businesses that have a lot of debt. A lot of debt puts a business under a lot of strain, under a lot of risk, and I don't like to be a part of that. The equity value when I add cash, take away debt, is $39.5 billion, but the market cap of Zscaler is 31.4. So there's a discount of 21%. Now, more recently, let's look at the year to date. So Zscaler and CrowdStrike are kind of tracking each other there. They're both doing okay for the year, right? For year to date to be up 13% and 14%, that's a huge win, right? This year, the S&P is down. So both stocks are working, and Zscaler continues to be discounted. Not a giant discount, but it's a discount. Earnings per share don't quite get me to the value of the stock, but I trust this number more. I trust the free cash flow. This is truly the intrinsic value of a business. I like to track the earnings per share because it shows, tracking how well a business is growing. Is it getting more customers and so forth? That's also a variable that I want to keep my eye on. But this is a good discounted stock. It's getting to fair value. So I think the risk reward has changed. If we had been talking a month ago, I'd be, I'm a buy Zscaler. Now it's like, hey, if you want to own a security stock, Zscaler is probably the best choice that I see out there from the pure play cybersecurity software companies. It's better than Palo Alto, CrowdStrike, and others. But that's my evaluation on Zscaler. It's gone up a little bit and kind of getting closer to its intrinsic value by raising its stock price. So thanks for asking about that, Paco. Appreciate your support. All right, so that is Zscaler. The other stock that I wanted to take a look at is NVIDIA. Since we did talk about ASML, let's talk about NVIDIA. So NVIDIA is going to open down almost 7%. And this stock, man, over the 1 year, it's still up 27%. But of course, this stock is just having an awesome 5-year. But we can't invest in just using the rearview mirror. It's good to see historical data, but what's it going to do next is the big question. And the big news is that they are not going to be allowed to sell certain chips into China. And FYI, in passing, you see this analyst here. I've listened to her, forgot her name, but it looks like the Schwab Network interviewed her. She's one of the best when it comes to looking at technology and looking at semiconductors. It's going to kill me not knowing her name. So I'm going to look it up and I'll post it on the channel. But when I'm going to listen to this video after the stream because I have a lot of respect for her knowledge. She's a technologist. She's like the real deal. And now she writes research and then publishes research on semiconductor and other technology industries. And I really get a lot out of what she says. I love what she says about AI, by the way. Totally agree with her. If I could quote her. So AI, a lot of people believe that AI is going to do everything for us, and it's going to do everything for us here in 2025. And I'm kind of exaggerating what the sentiment is out there, but people think that, hey, doctors are going to open up their phones and, look up whatever symptoms you have, and then they're going to give you a solution based on what ChatGPT, has to say. And that's not correct. If they did that, they'd probably lose their license because ChatGPT is not approved by the FDA or the medical licensing boards. And what she said was that AI is most definitely, we've made a big leap forward in natural language processing of just a natural language statement. Like, hey, can you give me a summary of Abraham Lincoln's life? And ChatGPT or Gemini or Meta AI do a great job of writing that summary. That's where we're at, which is a very good advancement. But to think that you're going to get thinking in a box, decision-making in a box is an overstatement. And I really like how she talks about it. I think she's dead on what I'm seeing and what I believe is the current state. A lot of investing has happened in AI with people really believing in the dream, believing in the future state, which may happen in 5 or 10 years, or maybe 15. Well, investing when the actual outcome is going to happen 10, 15 years later is going to be really rough because investors are not that patient. As you can see in the semiconductor space, investors are not patient. They want to see results. They'll give you a couple quarters and that's it. So I think the big story this year with AI is going to be put up or shut up time. There's no more, this is how great it's going to be, speak. No, it's show me your AI revenue. And that's more for software companies that have been talking up AI for a while, or whoever has been talking up AI for 2 years. All right, show me your revenues. NVIDIA benefits from the whole momentum, right? If as the industry or the market really bought into AI, they bought GPUs to build large language models, to do the whole infrastructure for AI. But now NVIDIA is really struggling. The stock price is struggling to move up. For the past year, it really hasn't done much. Once we get to 104 at the open, the stock has not done much for 1 year. And the stock, if you have a letdown in demand, this stock's going to fall fall fast. It's already fallen quite a bit. But it looks like they're going to open at 7% down. We're about 5 minutes from the open. We'll see where that goes. NVIDIA is a stock that, man, it's so impressive how they grew. It's so impressive how the stock went up. But the best forecast I have for NVIDIA, and this is a very generous forecast, man. This is big money free cash flow forecast. This is like Apple. This is like Microsoft. And even when I give them that type of really optimistic projection, not counting these new issues they're having, like, hey, they can't sell to China. Well, China is the second biggest economy in the world. It's also very technologically advanced. They want to build AI, but they can't do it on NVIDIA chips now. Well, that's a huge problem for them, right? Even before I had that news baked into these numbers, it's trading 49% above its intrinsic value. It's always been the risk on NVIDIA. I shorted NVIDIA. I made money on that short. I'm out of that short position. I'm not shorting any stocks right now. I don't think I'm going to for a while. But this one here just did end up going in the direction that I thought it was going to go into. And I've been feeling that way since really late May of 2024, that the stock just cannot be supported by fundamentals. And the price is just too high. The euphoria is too intense. People are like, oh man, we're going to do everything with AI and we're going to need NVIDIA for everything. And that's not the truth. Every business would go broke if we had to depend on NVIDIA for everything. So that's interesting where NVIDIA is at today. They're going to have a tough day out there. So we'll see where that goes. All right. So just a reminder. Yeah, the hype cycle most definitely is real, but what is good is that this hype cycle is not as bad as the hype cycle that we dealt with during the dot-com bubble. If we look at the hype cycle with the dot-com bubble, man, that was extreme. This was pretty good, right? But let me go to the max. Back here, I mean, stocks got really nuts and the PEs were higher, but then the market just really got crushed. The NASDAQ, the whole index went down 73%. Oh man, I'm not hoping for that anytime soon. So we're correcting markets. Certain stocks are getting hammered. You know, utility companies that were supposed to sell all kinds of power, their stocks are down because they were really pumped up, and things I think are getting priced more appropriately. I still think that AI over the long haul is really, really exciting, but we're investors, right? We want to make money, and it's not about what's going to happen 5-10 years from now. It's about investing so that that capital is going to perform this year, next year, all years into the future. And that's the art in investing is buying at the right time and having businesses prove that they're going to be able to make a lot of money and generate cash. All right, so we went over ASML. We can move on to Abbott. Abbott Labs is a healthcare company, and they're a big cap stock. Looks like they are going to open 3% higher, $219 billion market cap, $42 billion in revenue. So investors are buying this company for, let's call it 6 times revenue, a little less than 6 times. And their PE is 16.39. Dividend is a little under 2. Analysts believe it's a buy, but it's not a really high discount. Abbott has had kind of a low growth rate. And I looked at their earnings and they grew at 4%, which isn't incredible, right? It's just adequate growth. single digit, and that's it. Free cash flow wise, a really good cash flow generating company, although their cash flow has come down, which is not good. So this is another company I'd probably take the average over the last 5-6 years and use that for an intrinsic model. I didn't create one for Abbott. I just wanted to go over the earnings. Gross margins are good. This is a med device company in a lot of ways, where they have to actually manufacture a product and then sell it to hospitals and patients and so forth. Pharma companies are more profitable because they just generate a pill, and it's really pennies to manufacture a pill that could sell for $200, $300, $400. So that's very, very profitable. But this company is a good one. They have good profit margins overall, good EBITDA margins, 26%, very good. I just think that they're probably fairly priced. The market, they don't have an exciting story behind them. It's not like they're growing at 20% and they have a new era off with Abbott. It's a sleepy company that, hey, if you want to buy into a healthcare company, you got it. But I can think of many other healthcare companies that are more exciting and I think are going to pay off far better than Abbott. They had a good earnings. Their markets opened 5% higher. Good for them. That is great. And their first quarter, they grew at 4%. That's adequate. They did expand their margins a little bit. So that's good. They're a little more profitable. They're growing at 4%. And it's just a really consistent company. This is probably a good company for an older investor that just wants reliability, good blue chip company, good Dow-based company where you're not going to be surprised by Abbott. Abbott sells into hospitals and they basically reorder from Abbott all the items they need to replenish to do what hospitals do, take care of people that come in that are sick or wounded, and take care of all the things that need to be taken care of. So this company here is they did their earnings. I'm just not an investor. It doesn't float my boat because, again, there's just so many good businesses in healthcare that are discounted. And part of it is that healthcare for the last couple of years hasn't really participated in that really good stock market. Healthcare companies were left behind, so to speak, on the rate of return. So their stock prices to begin with are really good. So I could say I own 6-7 different healthcare companies. I'm really excited about all of them, especially the small caps. They have great growth, great profit, cash flow. They have these patents on their drugs that look really good. So the whole space is really exciting. And Abbott had a good day. And it looks like they're going to have a very good day for their stock, up 5%. The other company that announced was Progressive, and Progressive is up 1%. Progressive's done great. The 1 year, they're up 36, 37%. Year to date, they're up 16%. If you have any stock in 2025 that is really breaking even, you'd be happy. But if you're up 16%, very, very good stock. PE is still at 19, even though they've been just doing really well. It's still a PE of 19. The insurance space has been really performing well. I'm an investor in Allstate and in Chubb, and I'm very happy with both. They're doing well year to date, and I think they're going to do well going forward. The insurance space is a space where it really keeps its customers because people will not cancel their insurance. They want to protect their assets, their car, their home. And even if we get hit with a recession, these guys will be resilient because people don't want to put their assets at risk. And they really know how to make money. And it really shows up. They've grown their revenues really well. Progressive has. and they've grown everything else really well. So free cash flows, look at the expansion on free cash flows. Nicely done, Progressive. Beautiful. Really great free cash flow. See how the intrinsic value of Progressive has really expanded because their cash flows have expanded. And I think I showed a couple of examples where cash flows hadn't really moved up, but this one certainly has. If you compare 2024 versus 2021, it's almost doubled. That is awesome. So those are the kind of businesses I'm looking for, which is why I invested in Allstate and Chubb. I can't see myself buying another insurance company, but maybe. It looks like MetLife, Paco, you want to look at MetLife? Let's look at that one after this. MetLife is more of a life insurance company, but it's in the industry of this insurance company. So really nice free cash flow growth, which is why the stock price is really moving up. Margins, it's an insurance company, so their margins aren't going to look like a pharmaceutical or a software company, but they're profitable. They hire really smart actuarians who know mathematics really well, and they make sure that they're going to be profitable is a way that I would say it. Revenue growth is going to keep growing for Progressive for the next 3 years, 16% in 2025. And they exceeded that number, by the way. We're going to look at their earnings in a bit. And then 10%, 2026, and then 10% on 2027. The earnings per share is going to grow this year, be a little flat next year, and then grow again in 2027. So there's just a lot of good green out there. The forward PE is not unrealistic. When you think about their growth here, I took a look at this before the stream. They are growing. Really, this is the line that premiums earned. That's their recognized revenue. It's growing by 20%. That's really, oop, I'm in the way there. Let me get out of the way. So they're growing by 20%. That's really good for a big business like this to be growing 20%. Like I just got done talking about Abbott, and I'm underwhelmed by their growth rate. But when you look at Progressive, you're like, geez, man, that's great growth rate. 20%. It's already a big, giant business. Nicely done. Very nicely done, which is why investors have been buying into Progressive. You've been seeing their stock price go up. So Progressive, as well as insurance, has really been a good space. Let's see where the stock is at. Still up 1%. Looks good. It's up even a little more. So that's good. Now let's take a look at MetLife. I like to think of MetLife as Snoopy's company. The little character has been their icon for a long time. So MetLife hasn't been doing as well. Let's try to figure out why. And the 1 year it's up 3.3%, pays a nice dividend of 3%. This is kind of a blue chip, Dow-based company, really reliable. They sell life insurance and people continue to buy it. They sell a variety of insurance products, but life insurance is what they're famous for. Let's take a look at their growth. I think this is what's been keeping the stock back, is just the lack of consistent growth. So you see this, this is not Progressive, right? Growing at 20%, or even Chubb's growing really well. So this is a value stock, but if they can find a way to grow, and the last quarter didn't help them any. The last quarter they contracted by 2%. So this inconsistency is what's holding back the stock. Looks like Q3 is their best quarter of the year. And their fourth quarter, they contracted by 2%. So MetLife is probably very profitable, but they're not grabbing everybody's attention by growing. And that's, I think, what is not holding the stock back from rallying. They don't have these big impact kind of growth rates like a Progressive in the space that's really been going up because their revenue has been really growing. If they can grow that revenue, they're going to grab the attention of the market and it's going to rally. Let's look at their cash flow. So there's their margins. So they have cash from operations. They don't have any CapEx because it's an insurance company. It's not like, oh, we need to build a factory. And they're generating $14.6 billion of cash from operations. And capital or free cash flow, the formula is pretty easy. You take cash from operations minus CapEx, capital expense, or, plant, property, and equipment is how it's listed on some income statements. You minus that amount, and then you get to free cash flow. Since they don't have anything there, it kind of errors out this formula. But basically, it's 14.6 billion. That's very good cash flow. If you took that number, multiplied it times 10, you get to $140 billion of value, way above its current market cap. The piece it's missing is growth. If they could start growing and be consistent about it, this stock will fly up. This stock will go up. But they have to learn. They have to figure out how to grow, start growing, show a clear path of growth, and then the stock will work. So that's what's going on with MetLife, Snoopy's company. This is enticing. You've heard of the term value trap. Everything looks really good, discounted, and then you kind of get trapped in a stock that underperforms, right? This one hasn't been all that bad. 5-year return, 123%. That's pretty damn good. And then the 1 year isn't too bad. The year to date is kind of bad. The other life insurance companies did okay. So I wonder why this one was kind of beat up. So this one here, if you're looking for a really discounted stock, you got it. And if you feel optimistic that, hey, they're going to start growing a little bit better, this might be a good idea. And you get paid a 3% dividend while you wait. So that's what's going on with MetLife. I think it's a solid company. Let me see if I have a valuation on it. I don't remember if I've looked at MetLife. Oop, misspelled Met. Yeah, here we go. So here's MetLife. 53% discount when I look at intrinsic value. And this is a discounted stock. Just the piece that's missing. And I already own insurance companies, so I'm not like looking to buy another insurance company. If they can excite the market with growth, this thing's going to take off. But until then, it's going to be maybe a stock that doesn't get anybody's attention, but it's discounted. So that's my analysis on MetLife. Tomas, how are you, sir? Very good to see you. Thanks for joining. And for members, if you want to look at a stock, please put it in the chat. Glad to take a look at some stocks. And if you're not a member, don't want to be a member, that's cool. If you'd like to look at a stock, it's $5 for a stock review, or if you want a volume discount, $10, I'll review 3 stocks. So you want to look at, Tomas, you want to look at Argentinian real estate company, ticker is IRS. Wow, that's a pretty good symbol, IRS. Everybody thinks of the IRS here in the United States as the Internal Revenue Service. Yeah, I think this one's it. Okay. So, inversiones y representaciones, sociedad anónima. Okay. So these guys engages in diversified real estate activities in Argentina. It operates through 5 segments: shopping malls, offices, hotels, sales and developments, and others. So this is like a real estate development company. Okay. And are these services or are they actually buying the land and then doing the project? It's listed as services, but let's take a quick peek at their website. Try to get a handle on what they do. So they build things. So they acquire assets, they build, okay. They probably operate, or they buy a property, add value to it, and then sell it at a profit. Okay. All right, let's take a look. So real estate right now is probably struggling with these higher interest rates, but I don't know how they are in Argentina. So um, here in the United States, interest rates went up substantially over the last 30 days. Market cap on this company is 1 billion, and we are dealing with US dollars. Revenue is 325 million, so you're paying 3 times revenue. Okay. Dividend is really high, 11.82. Okay. Year to date, they're down a bit. For the 1 year, they're up 52%. 5 year, they're up 275%. Okay. So it's been a winner for the 5 year and the 1 year. So they had explosive growth in 2022. They probably bought some big properties and or sold some, and they established their revenue run rate at, roughly, and this isn't ARS. So okay, so all right, I'm going to put this on a different screen and then I'll do the conversions. So this is in millions. So this is 335. So 335 million. So 335 million would be, I think that ends up being like 280 million or 28 million here on the total revenue line. So the contraction in revenue, and it's been consistent across all quarters. We'd have to get our heads around that. Why did they contract? If it's a real estate business, if they're buying and holding the real estate, if anything, leases and rents should be going up over time. And this one here, that is a red flag. Like, hey, why did it go down? And the stock price is showing that contraction, right? When we look at the stock price is reacting to that contraction. So that has to be explained. They grew really well a couple years back, but are they going to grow in the future? Okay, so these guys are going to be like a real estate investment trust. That's what we have here in the States, real estate investment trust. The dividends are, let's see, $1.63 for the dividend. And what is their, so $1.63. They are losing some money. So they don't have a net income, but let's see here. So you have EBITDA margin 45. So this is 75 million would be see cash flow. Operating cash flow is 108, 109, excuse me, 109, 674. So that's going to be so 91 million. And when we look at their shares outstanding, 739 million. So I'm not sure they can afford the dividend. I think they're not generating enough cash to pay that dividend. So I double check that. I think the dividend's probably going to go down. So this high dividend rate is probably under threat. They'll probably have to tone it down. The revenue is worrisome. Like, okay, they're contracting. It's a real estate company. I don't know how interest rates are in Argentina. Here in the United States, they're going up, and we have an economy that's slowing down. Those are two bad things for real estate, commercial real estate, like hospitality, hotels, and stuff. I don't know that they're going to be fully booked going forward. I think they're going to struggle a little bit. So this one here, this one's one that has a lot of question marks for me, and I'd have to really spend like an hour on this one and try to figure it out. Sorry, I can't be of more help on this one, Tomas. Kind of wish I could give you a couple of things to walk away with, but this one just has a lot of numbers that I can't make sense of. For sure, the growth is a problem. They don't have enough cash flow to pay for that dividend, so I'm worried about the dividend. And I don't understand their business well enough to know that, hey, they're going to be growing. So this is a business that you can buy now, and it's really going to benefit later. The other thing I worry about is the stock is really priced up if you look at the last 5 years. So it's like, okay, is it going to stay at that level? Is it going to come down some? I don't want it to buy it and then it comes down some. So there's a lot of things for me to worry about. But you're in Argentina. You could probably make sense of this better than I can. Let me know how I can help. Yeah, there's a lot of question marks. I would say no, because I first have to understand the business. I don't understand their business. There's too many things that I don't understand. And real estate's not, like, from a stock perspective, real estate is not a big category for my stock portfolio. I own real estate here in the United States and I rent it out to people, and that's done really well, but I totally understand it because it's local to me. I understand what areas to buy in, when the pricing is good, when to buy a property, rent it out, what the rents ought to be. And that's my lane, is investing directly or having one REIT, and that's CTRE. How you doing, Brandon? Good to see you. Looks like you want to see FLNG. Let's take a look. FLNG. So Flex LNG. Flex LNG, together with its subs, engages in the seaborne transportation of liquefied natural gas. Okay, so this is a shipping company moving natural gas, which is something of a necessity, especially in harsh winters when a lot of natural gas is going to be burned. Over the past year, it's down 11%. Over the 5 year, it's up 350%. Pays a huge dividend. Okay. And shipping companies have been paying huge dividends over the last couple of years. This is a small cap stock, 1.2 billion, and revenues at 356. Their revenue last couple of years has been flat, although the last year it came down by 4%. In the last 5 quarters are in the negative. The worst quarter coming as the most recent quarter. So these are not big contraction numbers, but it is a contraction. Back here, they grew probably because couple of things is COVID disrupted a lot of industries. So I give most businesses a pass that, hey, if you didn't grow here, and then probably business picked up the year after COVID. And they probably bought some ships, they put them into service, and voila, the revenues expand. So looks good, looks okay. So when we look at the profitability of the company, they are profitable. Earnings per share is 2.19, free cash flow of 182. They have had free cash for 3 years. All right, 182. Now, shipping companies have said many times they don't get valued like, a typical business, like, especially like technology or communication services. Those get really high valuations, but shipping is somewhat of a disregarded industry. You're lucky to get like a 10 PE. Man, businesses would be worth so much if they just got a 10. But this one here, what was the PE? This is a 10. So kind of answers my question. This run up has gotten it to a 10. But I could show you like Zim and others. They struggle just to get to that 10. So they have free cash flow, 180. So their margin, 182 million. Okay. And they've been consistent about that. That looks good. Now, natural gas is not like something that you need it 1 year and then not the next. Wherever they're shipping, it's going to be needed. They're going to continue to need it. The difference being is if you have a really harsh winter, a really cold winter, they may need more, as opposed to if they have a light winter, they need less. But we're not going to deal with like, oh, they needed 50% more, 30% less. It's usually just a couple percentage points. So the number of voyages maybe go down in a warm winter. So that looks interesting. This stock, I don't know that it's going to go up much more. Maybe investors might be interested in the dividend. So the dividend is, let's calculate what that actual dividend amount is. So I think the statement of cash flows will show that to us. So they paid $161 million in dividends here, and they had $182 million in free cash flow. So they can afford the dividend. They're paying most of it, which is fine. Return it to if you're not going to buy any ships or anything, give it back to your investors. So that's fine. So they can afford that dividend. They're probably going to operate at this cash flow level going forward, for 2025, 2026. I don't think tariffs are going to affect this because you need natural gas. You need it for a lot of things, just daily life. So it's a necessity. So if you like that dividend and you're okay with the stock isn't going to go up any, that's the play is, hey, I want the dividend and I don't expect any appreciation because I think the appreciation is kind of behind us. And it hasn't appreciated since really 2022. Look at that. It's just kind of stayed. It had the big run up coming out of COVID, and then it stayed somewhat near its current stock price. I don't expect it's going to rally back up to 30 some odd dollars, $36. I just don't see it. Like, what would cause that? If we had a big energy shock where, oh, all of a sudden, somebody really needs natural gas and they have to hire, the shipping rates go up or something like that, could cause a big increase in revenue. But this would be a play primarily on that dividend. I don't think the stock's going to appreciate much higher, and it's all about that dividend. So, so good luck with that. Yeah. Good morning, Mike. I've been busier than a one-arm paper hanger. Glad at least I'm able to catch the end of the stream. Yeah. Oh man. Well, good to see you, Mike. Let me know if there's a stock out there you want me to look at. All right, so let me look at the market. Then I have a couple other stocks that I want to look at, and you guys are welcome to put more stocks on the chat if you want me to look at them. Let's take a look at the market. All right, so the NASDAQ is deep in the red. Oh, come on, NASDAQ. We're having a decent week. Now we're back in the red zone. Yeah, the NASDAQ, probably the semiconductor space is probably most of that loss. Let's take a look. Oof, man, semiconductors are in the red, deep in the red. NVIDIA's down 6%. Broadcom's down. Qualcomm is down. AMD is down 6.5. It's tough day in semiconductor. Looks like software is down substantially today. Apple's down. Meta's just been getting hammered. The whole story that they may break up Meta is scaring investors away. Google is down. Healthcare, some parts of healthcare, the healthcare payers are up. Med device is up, but other spots are down. Like Lilly is down. AbbVie's down. Amazon, it's been going down consistently. The big mega caps, the Magnificent Seven, are not magnificent this year. They've just been getting hammered this year. Interesting. Walmart's down. Geez, Costco's down. All these big caps. Energy standing up tall. How's my Oxy? Let's take a look at Oxy. I've been buying into Occidental. It's kind of a contrarian move, but it's up nicely today. I am not in the green on Oxy, but it can't get any worse is why I've been buying into Oxy, and I want to build up a nice position. I have to admit, I am influenced by Warren Buffett, and if this stock's good enough for Warren Buffett, it's good enough for me if I can buy it at the right price. So I've been buying into Oxy. I already own Chevron. All right, we got some requests. So Mike, do I have any thoughts on how much Meta and the tech stocks like AMD, NVIDIA will drop? Okay, let me try to answer that. And then Tomas, thinking about selling Procter & Gamble. All right, let me talk about that. And then Mike, okay. So let me finish my thoughts and then I'm going to hit those three questions. So Occidental is doing okay. All right. Let's take a look at the sectors. what sectors are doing. Energy is up. We just saw that. Materials keep going up. See, keeps catching my attention because it's like when everything's dropping in technology, communication services, discretionary, there's materials. It's like it sticks out like a sore thumb. It's like, huh, interesting. Let's take a peek of a few material stocks that I'm tracking. So the first one is Dow. I started buying into Dow, and I can thank the stream for that. Somebody brought it up like a week ago. It's been sold off like it's just spoiled, rotten milk. Just you can't even get near it. It smells so bad. And I'm looking at the stock going, wait a second, this is a good company. And it's been sold off. Holy smokes, 52% in the 1 year. And I started buying it, and somebody brought it up. I started buying like here. Lucky me, huh? And I've been buying. I bought some more shares yesterday. And look at this dividend, and they can afford that dividend, 10%. It's been sold off. It's been freaking murdered. And this is a very well-known company. It's a materials company. It does packaging, infrastructure, mobility, all kinds of things, right? They're kind of a different version of 3M or what's that European company? I think it's a German company. I forgot their name. Small cap, 19.5 billion. Revenue's way high, 43 billion. So this is materials. And then the other material stock is BHP that I've been buying into. What's going on with BHP? It's down a little bit. Recovered nicely. This guy pays a 5% dividend. It's been sold off. And then the last one is TX. That one's up nicely today. All these are good dividend payers. This is an old school sector, but this year, old school is back. New school is struggling. Old school is doing okay. Energy is doing okay for the day. Materials doing really good for the year. All right, so let me get back to these questions. Okay, so let's start off with Meta. How far is Meta going to drop? That's, man, I don't know. Meta is the stories on Meta are, is the government going to break them up? Like, look at that. For the 1 year, you're barely scratching out a yield, right? A gain. But if they have to spin off Instagram, what does that world look like? Well, as a Meta shareholder, I would then be immediately an Instagram shareholder. So I would own two stocks of two really good businesses. The Facebook business is really strong. I don't know who's going to keep the AI business, but we'll see. And then there's the Instagram business, right? They're both really strong businesses. Now, I think we should let the company be, right? I hate it when the government steps in and says, well, we're going to break you up just because you've been too successful. And that's just not good. But if they do, I think I'll be okay as an investor. I'll be better than okay. I'll own two really good businesses. They could probably pick, maybe I keep them both, or maybe I say, hey, I like one over the other, so I'll just keep the one that I like. A lot of spinoffs do work far better. Like the spinoff of PayPal from its parent was, I already forgot the website. But that worked really well. And other businesses like General Electric just broke itself into three pieces. All three pieces are doing great. So that's a really good example. All three pieces of General Electric are just screaming up in value. So it's not the end of the world. It's not the end of the world if the government breaks it up. We'll see what happens. How low is it going to get? I don't know. I think Meta right now is discounted. But the reason why it's selling off is not it's not because it's overpriced or anything. I think it's the current stock price is 30% lower than its intrinsic value. And I think Meta, from a business perspective, has a lot of momentum. Their Meta AI business is a really good business. They have a huge advantage. They have 4 billion people logging into a Meta application each month. So they can present Meta AI to 4 billion people, which they're doing. They introduced it to me. They introduced it to my wife. My wife spends a lot of time every day on a Meta app. I'm communicating with a couple nieces on WhatsApp. I mean, Meta's all over me, and I'm just a guy. I'm a big time investor, long term investor, and I'm on Meta all the time. And I think I'm probably, like, my wife's on it more than I am, but the rest of my family is all over it. Like, Meta is a part of our family and our friends. Like, I have friends that I keep up with on Facebook and Instagram to some extent. So I think the business is, I don't know how far lower it's going to go. I could just tell you it's discounted, and I'm keeping my shares. If they split up the company, I think I'm going to win. If they keep the company together, I think I'm going to win. So it's a win-win situation for me. The other companies you asked about was AMD. So as I've shared with you, AMD is just not a business that I'm in love with. And they're down 6% today. Year to date, they're down 26%. For the 1 year, they're down 45%. And these guys, this has been AMD for the 25 years I've paid attention to AMD. They have a good period of time, they fall down. They have a good period of time, they fall down. And it seems like they've been, for a while, they were like trying to compete against Intel, and they were not successful. But the business hasn't ever kind of arrived and kind of been dominant, or at least super profitable, or generate a lot of free cash. My principal reason why I don't like AMD is they don't generate cash. Cash is at the center of my universe when it comes to long-term stock investing. And they have been around for a long time, and they just haven't become a great cash flow generating business. Other semiconductor companies have, and these guys haven't. That's why I cannot value them very well. Even if I took this number and said, okay, you guys are going to grow well. Let's say if we multiply that times 10, they're worth 24 billion. Multiply them times 20, they're worth 48 billion. That's as far as I can go. And they're being priced at 145 billion in market cap. So I'm too far away from, like, the intrinsic value for AMD in my book. It's like 50 billion, assuming they don't have any debt, which I don't think they do. So yeah, they have more cash than debt. So that's my big hang up with AMD. So how far can it fall? I mean, if it fell to $30 a share, I wouldn't be surprised. That's a big fall, right? But it's going there. It's gotten down to $55 a share in 2022, but everybody was down on that year. We're down to 89. I mean, it just doesn't have, I mean, what momentum does AMD have? If they could have gotten themselves in the GPU race, man, they could have made some money. But for a while, they were supposed to be the better data center play than in Intel. Whatever happened to that? What happened to that business? Why isn't that business flourishing right now? So there's just a lot of questions to be answered by the business. So yeah, this one can keep dropping in my book. It's certainly dropping today. And then I think you talked about Nvidia. I've already theorized Nvidia and I have numbers to back it up. And I think it's going to test $65 a share. It's going to aim for that, and maybe it gets to 80. But this one here, look at the momentum is down. And today it's down 6%. Like any hint of bad news, boom, it's going to drop. What's going to move Nvidia over the next 3 weeks is going to be when Microsoft announces and they talk about their data center and how much capital they're going to spend and how much money is expected to go to Nvidia. AWS, Amazon, when they announce, and when Google announces, and even Meta. Meta, I think, is also a big buyer of Nvidia product. If those businesses come out and say, we need to be careful, we're in AI, for the long haul, but we're going to pull back on our spend, I think Nvidia is going to get crushed. The expectation is that the spend from those big four that I named is going to continue. And if there's any comments that say, no, it's not going to continue, we can't afford to do that, or our stock prices, because if you look at the stocks for Microsoft, Google, and Amazon, those stocks have been getting hammered. So if they show up to their earnings and say, hey, investors, you guys have been selling off our stock, guess what? We're going to have less cash flow. It's going to keep getting hammered. So if they want the bleeding to stop on their stock price, they're going to have to stop spending so much in that data center. And that's going to directly impact Nvidia. We'll see. In a month's time, we'll see if Nvidia is going to be targeting like $65 a share, or if it's going to stabilize at $100 a share. Or, I don't see any story out there that's going to say, oh, Nvidia is going to go up to $200 a share. I can't think of a story that is going to fuel that type of optimism. Right now, it's all about like the economy could slow down. Well, that would hurt Nvidia. The AI fantasy is more fantasy than fact. Okay, that's hurting Nvidia, because if businesses bought into the AI hype and they spent a bunch of money on their data center, now they have to answer for it. How much revenue did you get out of that capital? None. It was just a pet project. Stocks get hammered. That's just the way it's going to go. So thanks for asking Mike that question. And as always, we can keep communicating on Discord and keep talking stocks. All right. So next question was, you're thinking about selling Procter & Gamble. I'm glad you owned it. Procter & Gamble has been a good stock this year. Well, not an absolute winner, but you've held your ground. And your thought is rotate into growth stocks. So if this is your only staple, so in principle, I think it's a good idea. That's what I'm trying to do. When I look at my portfolio, I'm trimming back some investments that I have that I've made money. I don't think they're going to move up much more. They may move down a little bit. So I've cashed some of those in to create some cash, some dry powder. And what I'm most excited about is these small caps that I think can really flourish once we get some of these questions answered. Are the tariffs going to go away? Is a recession here? Is it going to come? Are we going to get through it? And then once those really awesome businesses take off, I think I'm going to do really well. I am excited about that whole story. So I'm talking about, some of the stocks. I mean, you watch my channel regularly, you know which small caps I'm excited about. So I can't argue with it. I think it's a good idea. Procter & Gamble, I thought was doing a lot better. I was a little bit like, what? It only did. This is a staple. This is like, when I wash my clothes, I use Procter & Gamble. When I take a shower, I use Procter & Gamble. It's like these guys are a staple. I expected them to do better, and they do have a dividend, but that is underwhelming. Good luck, Tomas. All right, Mike. So why is Adobe continuing to drop? So Adobe is dropping because the story is that AI is going to disrupt their business. It's down again today. It's getting crushed this year. I'm holding my shares. This is an excellent business. Adobe's at the top of their food chain within the creative software space. And I'm just going to hang in there. It's going to come back. This is going to be a stock that once we figure out that AI is changing the user experience for software products, it most definitely is. And in some cases more than others, but people still need Adobe. It's like Adobe is a necessity for many industries. The thought that we were gonna quickly move away from that, I think, is inaccurate. And the other inaccuracy is the thought that Adobe doesn't have a clear opportunity to take AI and create more products. Knowing the software business the way I know it, Adobe has a huge advantage against their competition. Who can come into the Adobe space and compete against them? Few companies. Adobe can rewrite or I would say enhance their products with AI, and in some cases create new products that are AI driven, and then they have a new revenue stream. So I like that. They announce when is Adobe going to announce? June 12th. So we are a little far from their earnings, but even if they announce good numbers, which they have been announcing good numbers, the market hasn't cared in the past, but I think it's a nicely discounted stock. I bought at a good discount. I'm going to hold my shares because they are their current stock price is well below intrinsic value. And it's not only Adobe, Salesforce is being treated the same way. And I have a lot of respect for Salesforce. Number one in their food chain. They're number one. They're at the top of the stack with Salesforce automation, CRM, that kind of thing. And man, this whole AI thing has got investors confused. And I will gladly buy. I'm buying into CRM. It's one of my more recent buys, and I continue to buy shares. If it's down today, I'll pick up shares. So that is my observation on the software space. Is these businesses, I don't know, stock market. Sometimes stock markets, I don't agree with it. And I think over time, those businesses are going to be worth more. So Brandon, so Peter, so I don't have immediate thoughts on Peter Schiff. Let me remind myself of who he is and what his yeah, I don't have any comments. I've noticed him. I just don't know what he's about. Maybe I'll add him to potentially nickname Dr. Doom. All right. All right. Yeah. Let me take a note. Maybe I'll look into him a little deeper and look at his portfolio and see what he's about. I like studying super investors because I learned a lot. I learned a lot from studying them. Even if it's an investor that I don't agree with, like they invest in a different way, I still learn. So I'm good looking at Peter Schiff. Let me see if he's available on this website that we can look at his portfolio real quick. Yeah, I don't see him listed. So I don't know if he publishes his portfolio, if he files 13F reports and so forth. He should. I mean, he runs. He co-founded Echelon Wealth Partners. But did he get out of that business? Maybe. So I'll take a look at him after the stream. Yeah, thanks for bringing that up. All right, so CRM caught your eye. Yeah, I think, the good news about, so you want to look at, so I'm going to look at that one right after I answer this question. So the good news about the market correction is that certain businesses will get discounted. I think CRM is one of those businesses. It's getting discounted. It's getting kind of thrown out with the rest of the stocks. So, all right, let's look at Euro Pacific Holdings. So Euro Pacific Holdings. So do you have a symbol on that? So Euro Pacific Holdings. Yeah, I don't have luck finding it. If you have a symbol, I could look it up, a ticker. Let me know, Brandon. I don't know if it's this one, Eurotech Holdings. Oh, okay. That's Peter Schiff's Holdings. Okay. With that information, let me see if I could find anything. No, didn't find it. All right, but I'll take a look at Peter Schiff after the stream and see if I get any good information and maybe can create a video from him. I'm up to 14 super investors that I've looked at. This thing updates real time. Let's see where. Whoa, this thing really moved up. Really moved around, I should say. You see that Howard Marks is moving up on the ranks. Carl Icahn moving up. Michael Burry, I think, is still going to be on top. And I'm up to 14. And I was thinking I'd get to 15 and then kind of lock it in there. And just track these guys. I'm going to track this year to date for the remainder of the year. And as these investors issue their 13Fs, the only one that's recently, or the one that's most recently issued his 13F was Rob Vanal. He just issued it out on the 15th. So I was able to get really fresh data and put it in here. But let me see if I could do a quick sort on this. And a lot of people lose their minds over Warren Buffett. And let me explain that after I do this sort. Let me explain what I'm tracking here and that I'm not purposely disrespecting Mr. Buffett. So I'm not tracking Berkshire stock. I'm tracking the portfolio that Warren Buffett, or Berkshire Hathaway reports is their holdings, like Apple. I think they own Chevron, American Express, and this is what I'm tracking when we talk about Warren Buffett, is his portfolio, and I'm tracking his performance. I'm not talking the Berkshire stock. A lot of people like, I post that and they're like, oh, you're wrong. It's the Berkshire stock's doing better than that. You are correct. The Berkshire stock is doing better. But I'm kind of trying to see of the holdings that Warren Buffett and his team have made a decision on, how are those stocks performing? Like Chevron, Coca-Cola, Bank of America, and so forth. That's what I'm tracking. And Warren Buffett's down 10% if we look at the stocks that he made a decision to buy. And all the other investors are in there. One of my favorites, Pat Dorsey's way down here. So it's not like I'm playing favorites thing. Einhorn, he's like my second favorite guy. He's down here. Michael Burry, one of my favorites. He's on top. This guy's pretty solid, but I disagree with him on a couple of investing strategy items, and that's cool. He stays in his lane. He's been successful. He's awesome. I'll stay in my lane. Howard Marks, Warren Buffett. Okay. All right. So that was a good stream, guys. Thanks for tuning in. A very eventful day. Let me look at Prologis really quick. So Prologis is doing nothing today. I was hoping to draw out some knowledge. So these guys are in logistics, real estate. So they're a real estate company that has warehouse space. That's who they are. I thought they were a more logistics company. I was wrong. It's a REIT. Okay. So that doesn't really tell us a whole lot. It just tells us about how's the warehouse business, right? So I'm going to skip that one. All right. So NASDAQ down 2%. Good day to look to buy some stocks, and S&P is down, and the heat map, it's still illuminating red. Okay, it's going to be a down day, and the indexes fall, by the rate they're falling is because these big caps have a really big influence on those indexes. But it's good to see some of these tiny stocks, they're showing up. Hey, man, here's Progressive Insurance, Chubb. And I can't read the other one. There's Allstate up a little bit. So financials, the insurance space within financials is doing well. Energy's doing well. And some spaces within consumer staples are doing well. All right, cool. All right. So thanks for tuning in, everybody. We are 28 strong on the live stream, and appreciate all the members that showed up that support the channel. Thank you so much. And I'll try to stream again. Looks like today's Wednesday. Tomorrow morning, I'll try to stream again tomorrow morning. And then for all you members, we have a member conference call tonight at 8 p.m. Eastern, 5 p.m. Pacific. Look for the email invites to the invitation. It has the login details. If you didn't receive it or you can't find it, just look me up. I'll get that out to you. It'd be nice to have some people. We've had some really good member calls recently, really looking deep dive into stocks and what's going on. So I look forward to tonight's call. And with that, everybody, good luck today. It looks like it's a day to consider buying some stocks and seeing if there's some good discounts out there. And I wish you the best of success with your investments. Take care. We'll see you guys.